From FXEmpire, this is Chris taking a look at the upcoming 2024 year for gold. Gold, obviously, very bullish at multiple times through the year. And we did blow through this 2050 area. We gave it up pretty quickly. No follow through. Now, here's the thing. You can't necessarily say, well, we're going to turn around and see something nasty. I suspect what we're going to see is an attempt to, here on the monthly chart, attempt to get back into this area, and buyers will come in and pick it up. So I think it's going to remain a buy on the pullback type of situation. Keep in mind that the 1800-ish layer has been heavily defended twice over the last year. And I think that's your floor. Worst case scenario, I think that's where we get to. Now, of course, extraordinarily tight monetary policy could change that. But right now, we already have the Federal Reserve blinking and starting to talk about the possibility of loosening in 2024, which should help gold. 50-week EMA is right around 1930 and rising. I think that could offer support. When you look at the daily chart, you can see, this has been the year. It's just kind of straight up, drift down, straight up. So what I suspect we're going to have is a continuation of this move where we break higher, we kind of pull back, settle down, break higher. It's going to take a lot, but keep in mind that not only are central banks loosening monetary policies, central banks are net buyers of gold. So that puts a bid into the market regardless. We haven't even thought about the geopolitical concerns. There are certainly things out there that could get the market moving. Ukraine could, although I think a lot of that fear is starting to dissipate as it looks like the market has settled on the idea of the war either never ending or just ending where it's at. Now, we have the situation between the Israelis and the Palestinians, specifically Hamas, that is not getting better. So there is the possibility that we see the market take off from that, but it also seems like the war is not expanding. And that's the big concern for gold traders in places like New York and Tokyo. So I think you have geopolitical risk out there, but it's not as bad as it once was. I think the real driver is going to be rates and how they go lower from here. How you may eventually see negative real rates yet again, because that's the playbook the central banks use. Ironically, gold and Bitcoin are both going to benefit from this, assuming that we stay on the same trajectory that Jerome Powell suggested in the middle of December. It won't only be him, though. It'll be other central banks as well, although there are several out there who argue the case that they don't believe that inflation is whipped. But the reality is that if and when they have to pivot, they're going to have to pivot really hard. So that will turbocharge gold as well. Don't really have any interest in shorting gold. I do think it is a buy on the dips year as long as we can stay above 1800 where the 200-week EMA is approaching.